other stock that's been buzzing around has been RPP Infra. In the last couple of days, the stock has moved higher and, in fact, moved on very, very high volumes. So we have with us Ms. Nithya, the whole-time director of RPP Infra, who joins us now. Hi, ma'am. Thanks so much for joining in. Now, the reason we are calling you, ma'am, is that, in fact, in the last maybe a couple of trading sessions ago, there was a large trade and it was picked up by some marquee names. First things first, wanted to ask you, I'm just looking at a shareholding pattern. It reduced from 72% to around 68%. And now there was another 10% that was sold in the market. Will promoters sell more shares in the market? That's what we're asking.
No, definitely no. There is a requirement which we needed for the company. Since there's more opportunity now, and it's a good time that the company needs some funds to grab some opportunities and to execute the projects in time.
Right, ma'am. Ma'am, so the current promoter holding is at around 58%. Could you clarify that for us?
At 53%.
53% is what it's come down to. And at the start of the quarter, it was at around 68%.
No, that's around 63%.
All right.
All right. Ma'am, over the weekend, you also gave us some clarification on what the promoter's next step is. They are likely to infuse the funds back into the company in form of debt and then perhaps convert it back into equity. Can you please explain the rationale behind doing this? If you really wanted influential investors, you could have probably directly issued shares to them, right? Why dilute and pump in promoters' shares as the form of debt?
No, currently there's no option of converting it as a shares. Currently we are moving it as a loan to the company, and if needed in future it may be converted into shares. Exactly.
Why would you give the company a loan when you're holding equity itself? Why sell the equity and then convert it into loan or put it back in the form of a loan?
No. It should be in any one form, whether it should be debt or interest-free loan. It should be in either one form. So we thought that with a nominal interest rate, we can make it as a loan to the company.
All right, ma'am. I want to ask you about, what is that nominal interest rate you're talking about? But first, I just want to alert our viewers that I'm looking at the BSE. In December, the promoters held nearly around 72.5% stake in the company. As of March, it was nearly around 68%. And now, as the management is clarifying to us, it's come down to around 53%. These are details that I'm getting from the BSE itself. Ma'am, could you tell us what is that nominal interest rate that will be carried out for this particular money that's coming?
It will be 5 to 6%.
5 to 6%. All right. And if you could tell us, how does this change the working capital? How does this change the debt to equity of the company? What are the working capital days, basically?
Working capital days, by March, it comes to 200 days. And in the current year, we had a target of reducing it to by another 10 to 15 days.
10 to 15 days.
So could you tell us the quantum of money you're going to put in as debt for which you will be charging 5 to 6% interest rate?
That we have to, that is the plan, we have to do that. Most of the money will be around 70 to 75% of the money will be bring back to the company only.
All right, no, because we asked this because, your net profit at the end of this year was, at the end of this quarter was close to 6.5 crore rupees. So even if we annualize it, what exactly could the impact of incremental finance costs be on the bottom line of the company going forward?
The current year, are you asking for the current year or?
The future years when you put this money back as debt.
Yeah, definitely some part will be reduced, when compared to 16-17, the PAT will slightly improve because of the reduction in the finance cost. The way the finance cost is reduced means we are improving our rating rational also. In that way, straight away the interest cost will be reduced. And apart from that, we are bringing back the promoters' money to the company. By that way, also the interest cost will be normally reduced when compared to the last year.
Absolutely, ma'am. Very quickly, before we let you go, what is the revenue target for FY18 and what is the order inflow guidance as well that you can give us for the coming fiscal?
Yeah. Current year, we are targeting for 550 crore.
550
and current order book in our hand is around 850 crore. And around 450 crore of worth of order is in L1 position, which we expected to be in our book by, it will take another 2 months to confirm that.
All right, Nithya, thanks a lot for joining in and giving us those important details.